to attend. So I really do appreciate that. And I do appreciate everybody who is here at this moment. It's greatly appreciated. So I'm just waiting for YouTube to pull up. All right, and there we go. And so I really do appreciate that. There we go. And I do appreciate everybody who is here at this moment. It's greatly. All right, there you go. So we got that. And I'm going to, oops, I can't pull that on screen yet. Give me a second. All right, guys, make sure you got note and pen pad. I'm going to give you guys 3 points. To be honest with you guys, I'm very upset with myself this week. Very disappointed with me. Give me a second. So I'm going to share with you guys some things that I am not happy that I did this week. And I want you guys to learn from my mistakes. Give me a second. Okay, move you out. All right, go here. I don't mind being transparent with people. One thing I had learned a long time ago, when I was going through my Job experience, that people talk about you anyway. So why worry about who gonna say what? I'm less concerned about people saying whatever about me than I am how I feel about myself. So therefore, a lot of people say, "Man, you're very transparent. You're always talking yakety yak and hold back." Well, one of the biggest things I learned is that it doesn't matter whether people agree with me or disagree with me, people like you or don't like you. You know what? Jesus did all that, and in the end, they didn't like him either. They said crucify him. So at the end of the day, it don't matter. I prefer to be transparent with you guys so you can learn from Uncle P's mistakes so that you don't make them, and you can improve your trading journey than to try to act like everything is always perfect when it is not. Type of amen if you're with me so far. Type of amen if you're with me. Okay. So today you're going to hear my thinking process. I'm going to share some things with you guys. And I want us all to grow from this. Hold on one second. This camera. Let me see. All right. They say to do like this and do like that. I'm still learning how to. Oh, yeah, there we go. To zoom in. Okay. Still learning this camera. All right, this AI camera. And then you raise your hand. Okay, I just told it not to follow me no more. Okay, good. Still learning it. I got a list of procrastination things, which I woke up early this morning. I'm working on. I can't stand procrastination. I got several things that have been needing to be addressed, and I haven't gotten to them yet. So anyway, let's get focused. Get some notepad, pen, something to write with. Here we go. Number one, write this down. Don't build monuments, and every single one of these points are going to make sense. So just listen all the way through. Okay. All the way through. Number one, don't build monuments around rare moments. Don't build monuments around rare moments. Okay. What do I mean by that? There are moments that may happen, and this is not just a life lesson, but when we talk about charts, you're going to understand why I'm starting with this one. Okay. Very important. There are going to be moments that happen in our lives, but we cannot build our life around those moments. Okay. So when bad moments happen, we got to let it go. Even when good things happen, we celebrate for a moment and then we got to let it go. You know why? Because there's other moments that are coming that we're going to have to deal with. If you understand that so far, type a 10. Because when we get to this chart stuff, I'm going to explain exactly what I mean. And many of you guys are going to see a common mistake that all of us make when we're trading. And it's killing the life out of our accounts. Okay. I'm going to explain it. But I got to set the foundation. There are moments that may happen in your life that hurt or was bringing exhilaration. but you cannot build a monument around it. For an example, a lot of the religions that are in the world today is based off of a moment that happened in history, but there was no continuation of it. And now you have an entire religion around a moment. I'll give you an example. Jesus went up on what they call the mountain of transfiguration. Up on that mountain, there were some things that had happened. He took a couple of his disciples, which means students, with him. They saw what happened. Okay. When the experience was over, they turned and said, oh, we need to build some monuments right here, right now, for this moment. And Jesus said, nope, not necessary. It was just a moment. So the point is, as I talk about this next point, the mistakes that we make sometimes are because we're thinking, when we go back in our minds on our past trading experience, we look at it and say, oh, but there was an write this word down, write this word down. There was an exception to my rule. Write it down. Make absolutely sure you guys are writing stuff down. There was an exception to my rule that had happened in the markets. And as a result of the exception to the rule, I changed my rules. In other words, you're now building a monument around a moment. Type of 50, if this is starting to come together so far for you guys. And I did that. And I made a mistake. And I knew better. This is going to be a deep class because I got a whole lot more to go. Some of you guys want trading psychology. I'm giving you the best you need to know, because guess what? No matter how long you've been trading, you can find yourself falling into these situations and screwing up. Okay. You do not build a monument around a moment. You do not build a new strategy around a temporary market situation. Now, if that temporary situation, you consistently see it happening, it is not a temporary situation. It is something that you can consistently see that happens over time. But if it only happens rare, then avoid the moment. Don't build a monument around the moment. In other words, don't deviate from your strategy because of a moment. Now, what do I mean by that? All right. Let me go to, for an example, and again, please bear with me as my mouse tries to do what it needs to do. What do you find strange with this pair right here? This is the dollar. Everybody's been talking about the dollar is supposed to crash. The dollar's crashing, the dollar's crashing, which it has lost a lot of its value over time. But what do you see strange? That's correct, Robert. Robert got it. So here was his question. So you changed a rule you normally use to something different to try to fit the current environment? And the answer is yes, when I should have just stuck to my routine. Okay, Liz, you got the correct answer. It is steadily rising. Now, number one, I do get that we are in a political season. In other words, everything seems to float and be pretty right during presidential election time. Now, isn't it funny that all of this could have been happening the whole time? But right around president, hold on, let me go here. Let me do this for you guys. And again, see how I'm moving my mouse, but it's stuck? I got to figure that out with Zoom. I don't know why it's doing that. Okay. All right, let's go to a weekly chart. Okay. Here's the monthly. See, the daily is screwing up too. All right. So Here we go. Dollar was going up. Dollar started dragging down very, very badly. Then all of a sudden, here we go, January. Let me see when this started. Yep, January 8th of last year. We got to pretty things up. Why? Because in 2024, the election. So they prep a whole year in advance. Let's get this thing pretty again. We got people to impress. And now the dollar is way above normal records. Numbers are being reported as, oh, these are nice numbers. And it has broken through the normal, quote unquote, triple top. Do everybody see this? And see how my mouse is just moving so weird. Everybody see that? Type a yes if y'all seeing this with your own eyes on a naked chart. Naked chart. Is this normal? Is it normal? Y'all see the difference? See what I'm saying? Yeah, and whoever typed in whoever typed about Japan, yes, that was supposed to. They were supposed to have done a quote unquote intervention by potentially raising interest rates, and then all of a sudden they made a U-turn on theirs, the JPY. So nothing about this market appears to be normal. Appears to be normal. Antoine, I'm sure hoping that it will crash. Now, in addition to that, here's something that is also abnormal that is happening at the exact same time. And what else is happening right now that is not normal? Robert, you got it. War. And not just regular war. What happened was Israel and Hamas had been fighting. That caused a knee-jerk reaction in the markets because nobody expected that to happen, but it was a moment that caused the markets to act up. And then they resumed back to their normal routine, which is why 3 weeks ago, when I warned you guys, not only did we have a lot of economic data that was not normally done, all of those countries reporting their interest rates in the same exact week, that was not normal. I've never seen them do that before. In all of my years of trading, I have never seen 5 out of the 7 countries that we trade their currency pairs all reporting their interest rates in the same week. And the ones who wasn't reporting their interest rates in the same week turned around and started reporting inflation numbers. So pretty much every currency was having problems in the same week. And then it echoed right before, they did that right before another moment, right before Easter vacation. Do you guys see all these moments that are happening? Type a yes if you see what I'm saying so far. I want everybody to be clear before I give you some more medicine. Okay, before I give you the medicine, we gotta diagnose the problem. We gotta diagnose the problem. Okay, we gotta figure things out. Okay, so now you have Israel being fired upon by Iran with 300 rockets. And that just happened this past weekend or whatever. So that now is causing bigger alarm of potentially pulling in the US and its allies, potentially NATO. And now this is expanding into something bigger, which I also heard, and I can't confirm this, that Russia said, you better not fool around talking to the US. You better not fool around with getting involved with Iran, because guess what? We are their allies. So that means that if Israel goes on the attack to defend themselves against Iran while expecting the US to support them. If the US does that, then now we're pulling in Russia, potentially, if that report that I received was true. So now this war is expanding into a global war. Is that regular, or is that a moment of abnormality? Type. And I want to say thank you to my YouTube family for tuning in. Thank you very much for tuning in. Those who are watching now and those who will watch later. And don't tune me out, because I'm not done. I'm going to give you the medicine, but we got to figure out what is going on with these markets, because things are not normal. You have all seen gold go through astronomical numbers. The dollar is going through astronomical numbers, breaking records. Bitcoin and the crypto market, astronomical, abnormal situations. Now, I do know that Bitcoin has got its schedule for its halving that's coming up, which is a whole different story. But there's all these things that are converging, but they're individual moments that's causing the market to be abnormal. Type of 45, if you guys are following me so far. I want to make sure that all of you guys are following what I'm telling you so far before I get to the next part. Nothing is normal. Nothing. And this is the trading environment that all of us are in, and not just retail traders. When I say all, this is an even playing field for some. For some. Why do I say some? Because some of the traders in the market hire entire teams of analysts who are gathering data behind the scenes so that they can make their moves in the market, and we retailers don't have access to that, so we are playing catch up. And because we're coming late to the party, we're missing opportunities that the big institutions have access to, which is why you may see them making big moves in moments. And then we have to play price action game to try to catch up. I hope you guys are following me, because I'm taking you somewhere on this journey. Robert says individual moments already affect things, but all happening at once, that's a whole new ball game. What do you think? Yes, sir. What do you think been happening over the last several weeks? You have all these individual things that's attacking your trades. For some of you guys who've been losing trades, this is why. On one hand, I say don't blame yourself on some of these things. However, when I get to the medicine, you're going to see why I'm blaming myself for why I am not happy with my performance. Now, the other weeks before, no, but this week, absolutely, I'm disappointed with me. Because there's certain things that I knew better on that can improve even this crazy movement of the markets. There's a routine that I should have stuck to. But because of all these different things that are popping off, I'm trying to adjust and adapt to all these different things as opposed to just sticking to a plan. How many of you guys found yourself doing the same thing? If that is you also, type of 200. Same thing for the people on YouTube, type of 200. If you find yourself in abnormal moments and now you're acting irrationally and you deviate from your plan. Come on, don't let me be a feeling alone in this. And we deviate. For the retailers, and this is just a side note, and medicine, And then I'm going to talk about something very important. So make sure, sit your butt cheeks still, because I'm going to get into the medicine. Here's the first one. The first medicine, or the first routine that we break. Watch this. Actually, let me say it like this. Write this down in your notes. Right. Avoid emotional trading. Write that down. Avoid emotional trading. I'll repeat that again. Write this down. Avoid emotional trading. What do you mean by that, Uncle P? Here's what I'm talking about. When you lose control, don't lose control when you lose a trade. Write this down. Do not lose control when you lose a trade. I'll repeat that again. Do not lose control. And if I was to expand it, do not lose control of yourself when you lose a trade. So let's start again. Avoid emotional trading. Do not lose control of yourself when you lose a trade. They say all the time, hindsight is what? Type. Hindsight is what? Come on, keep typing. I want to make sure everybody's on board with this. Okay. Hindsight is 2020. In other words, looking back on things, now that you have more information, you can see things a whole lot more clear. But sometimes when you're in the moment, things were murky and you start making decisions not off of sound information or a plan. You start making decisions off of your emotions. Type amen if I'm telling the truth to some of you guys. Because this is what we do in our trading. This is what we do with our trading. Some of you guys, you've been taking prop firm test after prop firm test, account after account, and things ain't working out. Could it be possible that this single point so far, and we got more to cover, but could it be possible that you go back after losing a trade and you trading out of emotions and not out of your plan? Are you guys with me so far? In other words, you're trading out of character. This is not your normal way of trading. You're trading out of emotions. And you letting your emotions be the driver of your trading process now, not your plan. How do you know? Well, number one, instead of looking at the charts and just saying, okay, let me go back to the drawing board and let me reanalyze things and according to my plan. Nope, the first thing I got to do is get into a trade and watch. I got to double up on my lot size to make back what I lost. Type of 50 if you've done that. Come on, talk to me. Talk to me. Come on, talk to me. Don't pretend like your hands is clean when you got dirt underneath your nails. I'll call you out. Hmm? Hmm? Don't pretend like you didn't eat a slice of that cake when you got cream on your face. I'll call you out. See, emotions will say, I got to recoup my losses. So instead of sticking to the plan of 1 to 2% risk, maybe 5% risk, what do? You're putting out 25% risk. And when that didn't work out, now you got to take another trade at 50% risk to make back the 25 plus the other. And lo and behold, you blew an account. because you lost what? Emotional control. Robert said, I ate the whole cake. Yeah. Cream on the face and on the hands. Didn't even use a fork. Everybody with me so far? Type a yes if you're with me so far. Type a yes. And I'm about to get into some medicine. One thing I don't like dealing with fake, phony, Lord hold my tongue. God, I can't stand that. People who act like they ain't got nothing wrong with them, and they always talking from the mountaintop like they the best of the best thing that God created on earth. Never make mistakes. Man, you don't get your stinking cheeks away from me. Get on. I cannot stand people like that. I really can't. That's one of the reasons why before COVID, when they used to have seminars, one of the things I didn't like about seminars is hearing people talk like it's great for me to hear your success story. But why didn't you share how you felt, how it felt when you was coming up the ranks and all the struggles you went to get to where you are? I'm happy you got your Lambo. I'm happy you got your little manchy manch. But why aren't you sharing with others what it felt like when you didn't think you was going to make it? Why didn't you share about when you was on a roll and all of a sudden you hit a roadblock and things went one step forward, two step back? How did you overcome that? You don't say nothing about that. You just want people to think that it was just magically delicious. Like God gave you a special anointing to never make mistakes and never have to go through anything. And you hide behind the cloak of success while not helping people truly by telling them what stumbling blocks you had to overcome, because that's where they are. Somebody type a yes in the box. Type, 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 type. Type, 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 type. Come on. I don't like attending or hearing people do that. I learned more from when you made your mistakes than when you actually succeeded. Because if I can learn the mistakes or the challenges you went through and how you overcame them, then it's much easier for the rest of us to come on up the same ladder and avoid those holes. But if you keep screaming from the mountaintop talking about, look at me, it gives no pathway for the other person to see, well, how do you make it over this or over that? Type of number one if you're with me so far. Thanks, Robert. Robert said he's up $645 off the copycat service, which, by the way, yes, we're still beasting out. We're still beasting out. I hold myself with higher standards than normal people because I've been at this so long. So when I get upset with myself, that's because my standards for what I expect is much more higher than what other people even expect of me. So thank you, Robert, for sharing that. Yes, the copycat group, we're doing well, but I still expect more from me. And I'll get to it because I ain't even got to it yet. Keep tuning in. I got more. The first medicine that you need to choke down when you're in an emotional battle and you're about to take your next trade, do not try to double up on your next trade. Do not. One of the problems with reversal trading is it's hard to call tops and bottoms in a turbulent situation. Let's go back to what I originally said. We have an economic storm that hit the market right before the market then went to sleep for Easter holiday. It woke back up to more bad news. And then over this weekend, it got even more bad news that hit the world stage that is now causing great fear and alarm in the markets. So the markets themselves are unstable. And you cannot be in a stable relationship when both parties are very unstable. It's a very destructive relationship. Both of y'all can't be crazy at the same time. And it's so sad to have two crazy people spitting out children trying to raise a family. Sad for the children to have to be raised in such an environment. The markets are no different. The markets have a right to be crazy and unstable because it's the markets. You asked and I asked to participate with them. They didn't ask us to come. We wanted to be joined to them. They never invited us. We volunteered for this. So if the markets are unstable and you know that, then you have to be the stable person to stick with the plan. What's the first part of the plan then, Uncle P? The first part of the plan is do not, under any circumstance, try to revenge trade and double down. Because if the market continues to go in the opposite direction of what you think it's going to go, you've lost 2 to 3 times the amount of money in your account that you could have saved. The truth of the matter is, the crazier the market, write this down, the crazier the market, the less you put on a trade. I'm going to repeat that. That's medicine number 1 for today. The crazier the market is, the less you place on each trade. I want to make sure you guys got that. Type the word less in the box. I want to make sure everybody's getting this. You don't put more on a trade to try to catch up on the loss. You put less when the market is unstable. Because who's to say that it's going to stop at this point? It can continue. You don't know, Nostradamus or Nostradamuses. Because that's what we do for a living. We're trying to play Nostradamus. We're trying to read the future. We use indicators and all these different things to try to predict what future movement may happen in the market. But because of the economic and war pressuring the markets, it's causing it to be unstable. So the smartest thing to do is reduce your lot size. I don't give a darn about how fast you're trying to pass a prop firm. I don't care. Slow it down. Let me give y'all a better idea to help you with this point. And then we got another one to cover. When there's an accident on a freeway, even if it's been pulled over to the side, what happens to traffic? What happens to traffic? Come on. Thank you, Liz. Thank you, y'all. There you go. It's traffic slows down. Why does traffic slow down? Why does traffic slow down? There was an accident. It's been moved over to the side of the road. Charlie says, people want to see what happened. You got that doggone right. The traffic could flow just like normal, but it doesn't flow like normal. Why? Because psychologically, all the drivers want to see what happened. They psychologically don't speed up during an accident. They psychologically slow down. And each vehicle does the same thing without speaking to the other cars. It's called herd mentality. They all know to slow down and they all get real nosy. Now, a person who's late to work will be the only person in some situation like that who's screaming and hollering and cussing for the freeway to speed up. They don't care about the accident. They call them, y'all over here rubbernecking. But everybody else want to see what happened. They're paying attention that something abnormal has just taken place. And they want to see how bad was it. And in the back of their minds, they said, it could have been me. Because some drivers go past and they actually think that, man, that could have been me. When you're trading in a bad environment that is full of wrecks, such as what we're seeing in the market, the smart thing to do is not to be the person who's trying to speed up and take 20 or 30 additional trades at double the lot size to hurry up and make it. What would be the smart thing to do? Reggie says slay out. Robert says slow down. Both of those answers are correct. Either stay out or slow down. Slow back, slow down, slow down, slow down. Slow it down. And part of that slowdown is to, if you're going to stay in the market, reduce your lot size because you're not trading in normal environments. Therefore, if you lose a trade, it won't break your account. Because once the storm clears, then there's blue skies. Like I'm looking out my office window now, see the lake right here, beautiful lake, blue skies, blue lake, blue skies, blue lake, blue skies. But guess what? A little while ago, it was storms. Tropical storm came through. And so that thing cleared out, guess what? Blue lake, blue skies, blue lake, blue skies. It's gorgeous outside today. Can't wait to be out there. Probably gonna head out the moment I end this class. It's gorgeous. And that's the way the market is. It gets gorgeous. So all you have to do is just survive the storm and stick to your plan. The first plan is to regulate how much you're putting on a trade. That requires you to be under emotional control. That's number one. Let's go to the next point. This is critical. For those who came to class, you're going to be glad you did. Why am I upset with myself then? If I know this part, that part don't bother me. I get that part. Y'all better stick around because this is the good part. You want to hear this. For those who watch my Sunday video, I'm going to tell you where my mistake would happen. And I'll tell you my mistake. All right, let me go to these charts. Let's go to sexy. All right. On Sunday, when I did my chart analysis for the week, I even told you guys, I said that these levels have hit an abnormal range. Here's going back to making a monument, a moment into a monument. You want to hear this very clear. And I'm going to use AUD USD. And I'm going to use the 4-hour time frame, and you can go to the daily. And here's where it gets really good. You're going to be glad you stayed for this class because I'm going to bring it all together now. Why am I upset with me? Or actually, let me see GU. Okay. Ooh, see, it's sitting right there now. It's at the 50% retracement, and it's sitting on support dot, and now this thing is bouncing. It's bouncing up. Everybody seeing this? Type a yes if you're seeing this. Now we're on the charts. Okay. Everybody seeing this? All right, watch this. Now I'm going to bring it all together so that you can then understand why Uncle P was pissed at himself. Okay. You're going to understand why I'm disappointed with me. Let me mark this up. Go back to my Sunday video. And I told you guys that the markets had dropped astronomically abnormal. For those who watch my Sunday video, type a 50 in the box if you remember me saying this. This is critical what I'm about to cover for you guys. Okay, and now I'm going to bring it all together so you can see, okay, Uncle P, everything makes sense, but why are you upset? And y'all see my mouse is stuck? Oh my God, I can't stand this. Every update ain't good. All right, here's a good strong level. And I even showed you guys this on the video. Okay. Okay. And I told you guys that price action, when there's a strong news event, it does not respect levels. It does not respect levels. When there's a strong economic information that comes out, price action does not, the market, let me rephrase that. The market does not respect levels. Please write that in your notes. This is one of the reasons why I don't trust any trade 100%, which is why I don't like over leveraging on any given trade. Because every time I burn myself, because any news could pop off at any time, and here I go taking on an unnecessary amount of loss when I should have stuck to my financial plan. Your financial plan is your savior of your account against situations like this. So here is a strong support level, price action people. Yeah, here, price action is king, Uncle P. Uncle P, price action is king. I don't know about all that fundamentals now we be talking about, Uncle P. See, what we do is we draw in our zones. Ain't that what you taught? Type of yes. Come on. Don't leave me now. Don't leave me now because I'm stepping on toes. Come on, Jesus. Come on, Lord. Come on, come on. Come on, type. Come on, tell the truth. And is this wrong? No, it's not. I'm nothing against it. This is correct. You should be looking to the left, to the left, to the left. Ain't that what they say? To the left, to the left. Look to the left, and you're drawing your support and resistance levels. So far, I'm correct, am I not? Come on, talk to me now. I want everybody typing. I want y'all to participate. See, don't nobody talk about this stuff. Because I'm going to give you guys something that is so powerful. And this is why I'm pissed off with myself, because I knew better. I knew better. I knew better. So the financial thing, I get that. But my second half of my plan, I freaking know I want to use an F word. God hold my tongue. I freaking knew better. And I got baited in and got punched in my mouth. And I'm pissed. Not at the market, at me. I knew better. And when I tell you this mistake, all of y'all gonna say, well, dang, he sure was right. Because I've been teaching you the same thing. And this is one I want you guys to learn. No matter how long you've been trading, you can still turn around and make silly mistakes. They are correctable, especially if you're constantly making sure that you don't over leverage your account. So those are controlled. You can clean them up. You can clean them up. But why make them in the first place? And you say, well, Uncle P, what in the heck are you talking about? Oh, God, this is going to make sense to you guys. Y'all are going to love that you came to class today. You're going to love it. Watch this. So we draw on these levels. But new levels, new devils. That's what church folks say, ain't it? my people who know that, who go to church, say amen. New levels, new devils. We heard that, right? When an economics news event comes out, it does not respect levels at all. So that's not where I'm upset with myself about. So data comes out, and if it's whatever, then guess what? This is what will happen. It will break right through these levels because it does not care. Fundamentals always will override technicals. I'll repeat that again. Fundamentals or news, economic data will override technicals. Technicals are only in place to support economic data, not the other way around. Part of the reason why retail traders are constantly in the 80 to 90 percentile of losing is because they don't even think about the major part of fundamentals, which is news. And furthermore, even if you marked up your charts correct, such as putting in zones, support zones into resistance levels and all this stuff, you were correct. Wasn't no wrong with that. But did you check news first? Interesting. Now, what if you did check news and what if you did do this correct? What was the problem? None of that was the problem. The problem was that economic data can come out of any given time and it can blast through these levels. And guess what? The only thing that's going to save your account is you not over leveraging. So that every trade you take from henceforth, don't ever over leverage, because do not trust your trade and your markups 100%. Okay. But is that my problem? No, that wasn't my problem. I told you guys that on Sunday's video. Here's my problem. Let's get to it. Get your pens up and write. What I thought. Notice what I'm starting with. What I thought may happen is because this thing had broke through such a deep level. I thought for sure that the new opening week may create a temporary moment of pullback. Are you guys following me? For those who've been trading or know what I've been saying for the longest, on Sundays and Mondays, what trading style do I stick to? Reversal trading or trend trading? Talk to me. Trend. Those who's dipping out of class, you're going to miss out. If you ain't got to go, I suggest you sit your butt right on still, because I'm going to tell you, for those who lost trades earlier in this week, you make the same mistake. I'm getting to the meat of the meal. I served you your appetizer. I put some bread and butter on your table. Now here's the real meal. Time to eat the real meal. I don't care about support and resistance levels, supply and demand zones. At the beginning of the week, I have always done that. I ignore it. But because there was an exception, I made a mistake. Watch this. Sorry that my mouse is frozen again. All right. I'm assuming you didn't drop this far, bro, because of news from last week. Surely. And I'm just going to draw up whatever line I can get in, because, again, I can't do it right because this mouse is stuck and acting up. Okay. Surely enough. And you guys can see it. A little breakthrough here, but surely enough, when you hit this level here, surely enough, or better yet, let me redo it like this. Right here. Surely enough, you can see that. Should be, at least if you're going to bounce, at least you should bounce up and come and touch this trend line or whatever. Surely enough, you're going to come up and it goes through. And surely enough, you say, okay, this should have been the level. Okay. But what did it do? It went further and further. Why? Because you're trying to call tops and bottoms on days where the only thing you're supposed to be looking for is what? Type. What was I supposed to be looking for? Trends. I had no business marking up anything. I had no business checking out sexy analysts. I had no business being on these charts when it was Sunday and Monday. Who gives a rat's behind how far this thing fell on Friday? If it's Sunday and Monday, what is the trading rule that do you Do you? But what is my personal trading rule? Type, 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 type. Liz got it. I had no business being on this trading system. I had no business being here. I was only supposed to stay ocean wave, stick to the plan. And look, I missed out on money because I broke my rule. I'm going to give you something powerful, so stick with me. I'm going to get into that in just a moment. Sundays and Mondays, it doesn't even matter. Doesn't matter how far something fell. You trying to determine, oh, this is far enough, and you should be turning around. I will repeat the mistake. You and I say, oh, that's enough. You should be turning at this point. Type amen if y'all see my point. You trying to tell the market what it should be doing. The market says, no, I'm going to stick to my routine. On Sundays and Mondays, whatever direction it is, I'm going to stick to that. And I thought within myself, surely enough, the market has had enough dropping. And surely enough, it will start to reverse. I know the midweek reversal. I know to expect it late Tuesdays, Wednesdays, and Thursdays, midweek reversal. Surely enough, since it dropped so hard on Thursday and Friday, surely enough, it needs to come up for a breather. Surely enough, I thought. Now, did my thought stick to the plan? Yes or no? Liz, you got it first. No, it didn't stick to the plan. I have told many of you guys, do not trade reversals on Sundays and Mondays. Have I not said that? Come on. Those of you who've blown up your account, come on. When do you blow your accounts? Sundays and Mondays. Why? Because you marking up your charts. And when you do that, what are you? You one of them people. You one of them folk trying to find the lowest levels and the highest levels so you can trade the reversal patterns, but you're doing it on the what? Wrong day. So watch this. The market makers stuck to their routine. I know their routine. I assumed that they were going to break their routine. They did not. I did. And what was the results? Come on, type. Some of y'all doing the same thing. You get my point. You get my point. You get it. So now here you are scrambling when you should be doing some relaxing. And you know what makes me upset about it? It's because if I would have waited one more day, all of them that I called, they all actually did exactly what I said they were going to do. I was just 24 hours too early. Because why? What was the routine of the market? The market stuck to the routine. I didn't stick to the dance. So as a problem with the market doing its regular dance routine, regardless of how low the price action had dropped, it said when the market reopens on next week, we are going to stand with our routine, which is On Sundays and Mondays, we are still going to do our routine of doing what? Trending. And whatever direction it left off on Friday, it's going to finish up. And that was heading down for the US dollar. And watch this. Look, heading up here. It stuck to it. I thought that it was far enough, way too far down, way too fast. Surely enough, this is a bottom. It was a bottom, mine, because they put their foot in mine. Everybody understand what I'm saying? Everybody get it? Everybody get it? Are you getting this? I hope this didn't go over your head because I'm giving you the solution. There was two simple solutions. There, the market maker's routine is very simple. On Sundays and Mondays, I don't care if some of these, here's what should have happened. Here's what should have happened. Let me go here. Let me go to sexy. Okay. On some of these, what should have happened, and you're not going to win every trade. That's not the point. You're going to lose some of them. Okay. You're going to lose some of these trades. That's not the point. The point is you can reduce the number of them if you stick to their routine. What is their routine? Their routine is on Sundays and Mondays. They're going to go in a trend. Late going into Tuesdays, Wednesdays, and Thursdays is where you can find some potential reversals. So if you're a reversal trader, what do you need to do on Sundays and Mondays? Type. Reversal traders, what do you need to do? Liz got it. There you go. Stay your butt out. It is not your time for the markets. What did I do wrong? What did I do wrong? I assumed, and therefore I broke my routine of looking only for trend trades on a Sunday and Monday because I assumed that they were going to make an exception to the rule. You see why I said in the very beginning, do not build monuments around temporary moments. It was a temporary situation in the markets, but the market said, so what? We sticking to the routine. What about you? I said, no, I think that you have dipped down far enough or shot up far enough. Therefore, it should be over. Who said that? Did the market say that? Or did I say that? Type. Come on, talk to me now. If I can make a confession, surely enough, you can participate by at least acknowledging that you hear what I'm saying to you. Because some of y'all making the same mistakes. You are constantly looking for reversals when the market says, no, we're going to keep straight ahead. You've went through challenge after challenge, paying them folk all that money. You have went through account after account. And it's simply because the market stuck to the dance floor plan and we didn't. Why? Because we fought. And then we get into our emotions. And when you get into your emotions, you start over leveraging and you start making silly mistakes. When in essence, I should stick to the plan. And if I saw a pair that was making an exception, if I saw a pair that was making an exception, what should I have done? Type. What should I have done? Come on, talk to me now. Don't leave me out here by myself. You got it, Liz. Y'all got it. I should have stayed out of it and only looked for pairs that were going to be going. Let me show y'all what I should have did. I'll show you right now. Let's go to Ocean. Let's go to this little bad boy. Told you one of the pairs that stays in a nice trend is the Swiss pairs. I don't like trading Swiss for reversals. They're too sneaky, but when it comes to trending, that's what they do. They stick to the plan. Pretty easy. See? Easy up, easy down. You can see that right here. I should have only been looking for pairs that was going to fit what the plan was. What was the plan? On Sundays and Mondays, type again. Make sure you're typing or writing down what I'm telling you. What's the plan on Sundays and Mondays, people? Retail people, what's the plan? Trends only. Forget exceptional pairs that looks like, oh my God, this looked like a good setup, and you get your butt burned. There is nothing wrong with losing a trade. That's going to happen because we trade in an economic environment that's highly influenced by world events. So you're going to lose trades here or there. Not a problem with that. So all the people who bail out and say all this, that, and you know, oh, what's you so good, whatever, bye, bye. That's not the problem. Your trades are going to be attacked when the market gets unstable due to economic news or announcement of war or all these different things. That's going to happen. That's normal. That's just the way it is in the markets. If you can't handle that, you shouldn't be in the markets. That you can't control. But what we can control is the two things that I've covered today. Number one, how much are you putting on that trade? I, again, cannot tell you how many times I have to blame myself if I blow an account. Why? Because I put in the chat groups the other day. So somebody had emailed me a question, and I said, you know what? This is good to share with everybody. I said, so here's the deal. And they told me how much they had in their account, and they said, how much should you risk? And so I did that, and I put a factual calculation in there using a simple percentage calculator that if you had $1,000 and you risked even 5%, that's $50 per trade on a $1,000 account. How is it possible that you blew your account in a week? Hmm? Strategy blew my account. No, the strategy didn't blow your account. You did. Professional traders only use 1 to 2%. Even if you use 5%, which is $50 on a $1,000 account, how many trades? I want you guys to do some math. How many trades can a person lose at $50 on a $1,000 account? How many trades can they lose before they actually blow a $1,000 account? And this is especially important for those doing prop firm challenges. How are you constantly blowing accounts on challenges? Is it really the trades or is it you? Watch this. There you go. They type it in the box. 20 times 50 equals 1,000. That means you have to have lost 20 straight trades in a row in order to have blown even just a $1,000 account. Now you're doing a prop firm challenge, which they offer more than that. How is it possible you blew it in a matter of days? Was it the strategy or was it you? See, it's not the loss of a trade and it's not the drawdown. It's you. It's how much you're putting on the trade because you're trying to hurry up and get out of your job and you're trying to hurry up and pass these prop firms. And so therefore you're emotionally, logically, you know, everything I'm telling you today makes 100% truth. You could have taught this, but why don't you heed to it? Because we get emotional. When the markets start acting irrational, so do we. And I told you, two crazy people ain't gonna have a good relationship. One of them got to be stable. And it ain't gonna be the market, so it better be you. I saw the perfect set of OP. And, I don't care. What's the plan? Financial plan. Technically, it's only supposed to be 1 to 2%, but let's just say 5%. Okay, fine, 5%. You lose that trade, you still got 95% of your account left. Am I not telling the truth? Type of amen in the box. 95 plus 5 equal 100%. We can reverse it. 100%, 100 minus 5 equals 95. You still got 95% of your account left. How are you blowing it in a week or in a matter of days? You're getting too emotional. Now is this starting to make sense? Number two, do not break the routine. The market has a basic routine. Sundays and Mondays are trend trading days. Don't break the routine. That's the market's dance. You break it, you get punished. Yeah, but Uncle P, hold on, Uncle P. Hold on, Uncle P. Hold on. Hold up. See, 2 weeks ago, it was a Sunday, and I took a trade in reversal, and it worked out fine. See, that's you trying to build a monument around a moment. Yes, it may do it every once in a while, but is it that routine? Is it its routine? The answer is no. So every time you go hunting for exceptions, once in a while you may look up, but the majority of the time, what's going to happen to you? Type. Robert said his copycat account is up $700 now. See? Thank you, Rob, for sharing that. And that's $700 on the 25K demo. There you go. Cool. Liz, you got it. When you try to go against your dance partner called the market on the wrong day, it's going to come and get you eventually. And it's going to come after you hard. Why? Because you're trying to create a routine around a momentary situation. Yes, there was and I told you guys about exceptional days or days of exception. Those are days of exception. But what I should have done is, yes, I see that you potentially could be an exception, but I need to bypass you because you don't fit the rule. That's what I should have done. I should have ignored it and went and found a pair that fits the routine. Because come to find out, all of them fit the routine. They went down way further than I thought they would. They stuck to the routine. I didn't, as I thought. Type of 400 if this is all helping you guys and making sense to you. The market stuck to its plan. Trend traded on Sunday and Monday, reversal setups later. Starting in Tuesdays, late Tuesdays, going into Wednesdays, yeah. And what was so bad is because I was right on all of my trades. I was right. I was just 24 hours early. That's why I said I hold myself at a higher standard than everybody else because I knew better. But I just thought it was going to be an exception. And instead of trying to play exceptions, I should have just stuck to the plan. Okay, I see that you are an exception. You looking cute, but you ain't you ain't on the menu today. I'll leave you guys with this. Sometimes you go to a restaurant and they'll say, we have daily specials. Daily specials. I know there's this barbecue place and they say on Fridays it's all you can eat fish fry. Okay, all you can eat fish fry on Fridays. What happens if I come in on Wednesday? Talk to me. Yes, Robert, Ocean Wave caught most of those trades. It definitely did. It did. It did. And I should have done better. See? I'm just showing you the dollar pairs. Ocean Wave played them straight. Had I just stuck with what Ocean Wave said, look there. And you can see them curving off the bottom now, even on Ocean Wave. Why? Because it's midweek reversal. The market stuck to the plan. So here's the point. Yeah, you can go to the restaurant and order some fish, but you're not going to get all you can eat on a Wednesday. Why? Because it's not the day for that. You can argue and cry, well, you got it on this menu. Yeah, but there's a catch to it. I said there's going to be an all you can eat on Friday, not today. Today is Wednesday. So get your silly self about this restaurant trying to defend a point that is stupid because clearly it said on Friday is unlimited catfish. You can have all that, well, only catfish, but y'all get what I'm saying. You can have all the fish fry, unlimited fish. You can have all that you want on Friday, not today. Today is Wednesday. So you're right, but you're wrong. You're right about what you're ordering, but you're ordering it at the wrong time. Type of 500 if you understand what I just said. And this is the retail trader's dilemma. We get anxious because we're seeing something, and therefore we say, okay, I know what he said, but you know what? I think it's, and the market chews your behind up. Why do you think 80 to 90% of retail traders never make no money? Because it's simple weekly routine of the market we break. And you know when I feel good about my trading week, wins and losses, it doesn't even matter. It's when I know I stuck to the dance plan. When I stick to the dance plan, it's a beautiful week. Even with a loss here or there, it's still a gorgeous week. And typically, I'm going to always come out on top. I'm going to always finish the week strong and profitable because I went with the flow of the market. But the moment I start looking cockeyed at it, trying to figure out how I can take advantage of this unique situation, it takes advantage of me. I'll close class with this. I'm not even doing question and answer today. I want you guys to absorb what you have been taught today. Because trading is really actually extremely easy. I had no business. I'll show you again as soon as this mouse try to move. I had no business at all looking at this trading system. And here, let me hit Control Y just so y'all will see it. Today is Wednesday. Am I not correct? Type a yes if I'm correct. I want y'all to see this with your own eyes. Today is Wednesday. Am I not correct? You need to see, you want to see price action? Okay, great. Uncle P's going to show you price action. Great. You can see here's the bottom. All right, so I'm going to mark this up. See? You see where I'm pissed at me. I knew better. Come on, market. Again, sorry about this. Zoom's update then messed up some things. I'm waiting for it to go back to the 1 hour. Okay, so you can see I marked up the line where the bottom actually happened. So on the 4 hour, it looks like surely enough, this thing that fell this far, surely enough, this is, oh my God, it should be, should stop. Did it? What was the trend? Type. What was the trend doing? Come on, y'all got it. Y'all got it. Y'all got it. You see it. But I said, no, this thing that fell, hey man, how many pips? Watch this. Here's the exception. Here's me rationalizing, trying to put my thoughts into a matter that didn't require my thinking. This thing then fell and is sitting on the 23.6 Fibonacci level. And you done already fell 180 pips. I know for sure that you should be. And so therefore, yeah, did it? It's pulled up. It did. And then look, broke right through. Fell right through the floor again. What day is this, y'all? Type, type, type. Don't tell me it's Wednesday. What day is this? In trading terminology, such as we all know. Derek, you got it. It's midweek reversal. This thing continued to fall because it stuck to the plan. And here's Tuesday. You can see where the final candle came in that took out the stop losses. And then look at Wednesday, midweek reversal. All I had to do was stick to the plan. Stick to the plan. Late Tuesday going into Wednesday, then you look for reversals. If this looks delicious for a reversal, but it's on the wrong day, what should I have done? Type. What should I have done? What should I have done? I'm looking for two words specifically because this is what's going to bless you. What should I have done? Reggie, you close. Mm-mm. Mm-mm. Y'all, Rob, I see it. Rob, you funny. For time's sake, let me give it to you. Here's the two words. I should have ignored it. Reversal traders, those who spending your weekends marking up your charts only to keep blowing up your accounts. I keep trying to tell you the same thing. And if I deviate from what I teach and what I know about real market behavior, not market structure, market behavior that creates the structure, the market tends to push down, push down, push down, and then midweek it pulls up for a breather. So the early moves to the upside are fake false breakouts. And then it drops, and the real move comes midweek. I got played. Or let me rephrase that. I played myself for not honoring the rule. If it looks delicious, I should have said, you know what? That's no different from me looking at a woman who's real sexy, but I'm married to Nancy. You look delicious, but I need to ignore you. You look attractive, but I need to ignore you. Liz, you got it. I couldn't say that any better, Liz, and I think we'll close there. When the trade looks like an exception, ignore it. That is the key. I'll repeat what she said because that's the perfect. When the trade looks like an exception, ignore it. What's the exception? If you're a nice looking reversal trade on a trend trading day, I should not be looking at you. I should go on to the ocean wave and stick to the plan of looking only for trend trades on ocean wave. Then when midweek happens, meaning late Tuesday, Wednesday, and going into Thursday, then I switch over to this system and start looking for reversals, not before. And I knew better. Now, this is something your little channels that you follow on YouTube and this and that. Number one, they ain't teaching no live class. And number two, they ain't going to confess their sins publicly. Okay, they want you to think every day is a rosy day for them. What I'm doing today is confessing my sins before the group. Why? Because we all can learn from them. It wasn't that I wasn't right on my analysis. I was just a day too early because the market says, okay, you're right, but not today. Yes, you can have the unlimited fish fry, but not today. You know the menu. You've been here many times. Why are you acting like you brand new? Yeah, I'll give you some reversal setups, but not today. It's not on the menu, Uncle P, Mr. Super Easy. You know the market menu. Why you playing, bro? Why you playing? If this class was helpful to you guys, type a 1,000 in the box and I'm done. I want to make sure everybody got blessed today. Look at my chart on the 1 hour. This thing then popped its butt up after putting me on the bottom. What day? Late Tuesday, just as I told you, because watch this. All this price action that's happening, and I'm sorry that my mouse is tripping. All these candles is price action on Tuesday. It push, created the bottom, took out this one candle. One candle, you can see it right here, taking out the last of the last, and then it popped right on up. All you had to do was wait. Yeah, but I thought it was an exception. Well, that's what you get for thinking. That's what the market's saying. That's what you get for thinking. We told you our routine. Either you want to stick to it or you don't. That's on you. But I told you we ain't offering it today. Yeah, but I spent out. See, I spent our weekend marking up my charts, and I put in my support resistance level, and I put in my supply and demand zones, and I put in my trend lines, and the market said, so what? I don't respect that until midweek. So that's your problem doing all unnecessary work too early. I improved to you it don't work. How many times have you blown your account doing that foolishness when you could have been out at the movies or on a date with or spending time with your kids or something? You sitting up here staring at me, market talking. You sitting up here staring at me, trying to analyze me on your weekends, trying to do a reversal trade when the market opened on Sunday and Monday. I constantly keep taking your money, stupid. See, do you see retailer? Yeah, but you remember that one time? I almost said the wrong word. Nigarachi, that was one time. You trying to build a monument around a moment. That was one time when I decided, okay, I'm gonna do a reversal on a Monday or a Sunday. That was one time. Here you go trying to build a monument around a moment. I don't normally do that. So if you want to keep doing monumental moments, then let me keep having your money. But if I told you that I'm offering unlimited fish on Friday, then come on the day I'm offering. Yeah, but you see, 3 months ago, you had unlimited fish. Yeah, that's because I had bought too much and I didn't want it to spoil. That didn't mean I was going to change the menu. It was just a 1 day special. I, I'm trying to tell you guys. That's why I'm upset with myself. I knew better. But I got caught up in an exception because I remember last time something like this had happened when it dropped way too hard, too fast. Then there was an exceptional day where the market did do some reversals to try to recorrect itself. When in essence, I should have looked at you and said, "No, I'm good. Let me go find somebody else who's going to stick to the day's routine. It is a Sunday and a Monday. I ain't got no business looking for reversals." No matter how good you look, no matter if you are a 1 day special, that was just a 1 day special. That don't mean you're gonna do it twice. And there's cost. Now the good news is I made it back up and I will continue to make it back up because I said, okay, I got it. I got you. Cool, player. I got you. Here's one more bonus. Here, one more bonus. One more bonus. Real quick before we go. One more bonus. One more bonus. One more bonus. And I'll close with this. This one more bonus for those who stuck around. And I know some of you guys got to go to work and all that stuff. I get it. I get it. Some of you guys are at work, and I know a lot of people gonna watch it later. But here's one more bonus for one more bonus out the door. Okay, one more bonus out the door. The other routine. Oh, this is gonna be good. Glad God gave this to me. Here's something that's very hard for me. This is very hard for me. Some of you guys, you want to quit your job. I have told you forever that is not a good idea. It's not. Because literally you have nothing to do but to sit around all day long looking at charts. And if you say, well, I'm not going to look at my charts, but you ain't got nothing else to do to occupy your time, you're going to eventually do what? What do you think you're going to do? What do you think you're going to do? You're bored, ain't nothing on TV, Netflix and chill ain't working because you've seen everything on Netflix. What do you think you're going to do? Your laptop is sitting right there, or your computer sitting right there. Or your phone, you're always on your phone. What do you think you're going to do? You're going to keep looking at them charts. And unfortunately, you're going to have a false setup. And you're going to look at that false setup. Look at this false setup here. Look at this false setup here. See, downtrend. But what happened? False setup. So you see the false setup. And because you bored, you know for absolute certain this ain't the time of day you're supposed to be trading. You have a rule about day trading, or here's my rule. I don't want to look at these charts until at least 9:30 Eastern Standard Time at night. I don't want to look at them. Or if I don't find something good at that time, then I'll get up about 4 or 5 a.m. Eastern Standard Time. I'm giving y'all game. I've covered 3 important things that you need to be doing when you trade. Number 1, your leverage. Number 2, the days of the week to which you should be looking at these charts and for what. And number 3, it's the time of day you should be on these charts. Any other time before or after that, you're gambling. I'm giving you hardcore success in this story. Mistake number 3. Nancy's out helping to save the world now. And you might hear her voice in her office. She has her office over there. And I can hear that she's in a conference meeting now. Sometimes I miss when I just retired her for several years. For many years, she didn't have to work. And when I was done with classes like this, for some of you guys who've been with me for years, as soon as I'm done with this, she was already waiting so that we can spend the day together. And it was just me and her. I miss that stuff. I respect the work that she's doing. She's helping a lot of unfortunate families who really needs help and different things like that. She's a blessing and just a godsend to these people. So I respect what she's doing. But the problem is, what do I do now? I got a gym in my house, which I woke up this morning, hit the gym, even though my muscles don't show it. But yeah, I'm working on it. Down about 15 pounds or something. But what do I do? I see her because she does work from home still, but I see her, but I don't bother her because she's in high demand. She's in high demand. She got people pulling on her all the time. So I don't want to be a burden on her and say, babe, well, I kind of missed the time we had, where you just wake up every morning and it was just, as soon as I'm done trading, it's just me and you. Whatever we want to do, well, let's just go do it. I don't have access to her like that no more. So what do you think my next big challenge is? What do you think it is? Type. Come on, I'm telling y'all truth. See, these people who do these videos sometimes, they don't tell you truth. They give you the highlights, but they don't give you the truth. And this truth that I'm giving to you is the same exact problem that every trader on the planet is having. And you're trying to esteem to be a full-time trader. And I'm telling you the challenge that you're going to face. Yeah, you got it. I'm looking at the charts at times when I know darn sure I will never be thinking about these charts. So now the temptation is to enter trades at times when I know it's inappropriate. Why? Because I ain't got nothing else to do. I can go to the beach, which it would be a beautiful day to. I mean, it is just gorgeous outside. I wish I can just turn the camera so y'all can see the lake and the blue skies. And there's at least 5 or 6 beaches not too far from where I live. Within 30 minutes to an hour, I can get to any one of these beaches, have restaurants on the beach. I can just do it right now. But Nancy's busy, so I'm gonna be doing it by myself. So it really ain't fun like that no more. It was fun when it was with her, but not now. And so too much time on your hands lead to mistakes because now you look at now your next now your real relationship is on hold for a couple of hours. So you picked up a side chick called these charts and you start breaking your routine again. So you broke your routine of how much money you're putting on the trade. You break your routine on what days you should be trend trading and what days you should be reversal trading. And then number 3, because you ain't got nothing else to do, Mr. or Mrs. Full-time trader, you're twiddling your thumbs. And now you're breaking rule number 3 is the timing of the market. Because the market's going to stick to its timing regardless. So if you come too early, that's on you. Type of 45 if this is helping somebody. I have learned that I have to, let me be clear. Uncle Peter, why do you wait until around 9:30 before you even look at the charts for the Asian session, the late Asian session? Okay, here's the reason why. All the price action that has happened today, you had the Frankfurt session open, you had the London session open, and you had the US session open. What sessions were not open yet to react to the markets? Which ones? Type. And this will also explain why Sundays and Mondays typically stay in the trend. What? Type. Okay. London, Frankfurt, and New York has closed. What markets did not get a chance to have a reaction to today's price action or events? What markets? Come on, talk to me. Asian and Australian. You got it. So when the Australian market opens at 5 p.m. Eastern Standard Time, it does its little thing. But the pip movement around that time is only around 25 or so, not much movement, not a whole lot of movement. That's why that market is so slow. It's the Australian market. It's a very slow market, okay? Especially for the US dollar or or the euro or the GBP. It's really not their market. So the markets, the banks and institutions can react, but it won't be much. But then when the Australian and Asian market or the JPY session opens, both of those sessions together can bring a little bit more volume, which it trades within a range of about 25, 50 pips. So what happens is this is where you get your false breakouts to the upside. If it's a downtrend, it will be and I'm sorry for this mouse. It'll be a false breakout to the upside to fool you. And then the real move happened. Look at what I got this on my chart for a reason. I said I was going to quit, but I got to share this with you. So I know that this is going to happen during the Asian session. It's going to be a fake move. It's not the real thing. But if I'm bored, twiddling my thumbs, and it's 6:30 p.m. Eastern Standard Time, that means I'm getting caught looking at these charts when they're looking delicious at the wrong time. Had I waited for my routine to know when you're done with your foolishness, I could have waited for this setup and caught it in the right direction, not the wrong. Here it is again. Same thing. Rinse and repeat. And then it dropped again. So number one is leveraging. Don't over leverage. Number two, trade on your style of trading on the right day when the market is going to be compatible with what you are after. If you are a trend trader, Sundays and Mondays is your best days. If you're a reversal trader, late Tuesday, going into Wednesday, Thursday, and some Fridays is going to be your best days. What times? I look at the charts around 9:30 in the evening, after I know the Asian session is already open and the Australian market has already been open. So all of them and their market manipulation is pretty much over, which is what you see right here. Market manipulation, now it's over. See, you can see it right here. Here was its peak. Fake, fake move, fake move, fake move. Then boom, levels off, and then there was a drop. Then the next day, they came back and did the same thing over and over. Fake move, fake move, fake move during the Asian session, sets up for a good setup, and then the next drop. And then you had the reversal. It's right here on the charts. You want to see price action? There it is. Now, if you lose a trade from here or there, that's one-offs. But you want to increase your winning percentage? Stick to your routine. I'm giving y'all game. This is what I've been doing all this time. It works perfectly for me until I decide to go against it because I saw something exceptional when I should have ignored the exception and just found the pairs that sticks to the routine. So before you quit your job full time, I suggest consider what I just told you. What will you be doing outside of trading? Because trading only take a few minutes. What else will you be doing? Because if you ain't got nothing else to do, you're gonna be tampering with this time frame and you're gonna mess up. You're gonna get false moves because you're looking at the charts when you ain't had no business looking at them. All right, you guys, I think I'm done for today. If this was very helpful, please type an amen in the box twice, type it twice, and then we're done. Type amen twice, just to make sure you guys enjoyed it. Thank you very much for attending. And again, I hope this class was very helpful to you, and I'll see y'all next week. Well, I'm trying to end it.